Okay, so question over trade management, and here's the question. You know, this person says trade management, for example. Excuse me. For example, how do you adjust stop loss as the trade progresses? Do you trail? Do you move it to break even after some target is reached? Do you move to break even when actual risk comes into play, or do you adjust differently based on how the bars look? And if so, what? Yeah. So really, and I'm gonna try to keep this in the background just so people can see it for a few minutes. Really, what I try to do is I'm just gonna move this out of the way. Really, what I try to do is sorry, I got kind of distracted. Yeah. So what I try to do, it really depends on number one, how I'm feeling. Uh, for example, I did not, I stopped trading after over here, and part of that was just I was rather busy today, and I was fairly tired, so you know, I just to kind of walk you through it, bought somewhere down here, and honestly, I got up here, I got out up here. What I my default is I try and trade always in, and I talk about that every day. When I don't catch them all, but I try and catch most of them, and that is, for example, today, always in long, buy above here, buy here, try and get out here, maybe below here, you know, try and buy somewhere over here, and then for me, either get out below this bar, and get back in up here, get out again, maybe get long again, get out again, and that's pretty much it for today. I try my best to hold until it doesn't make sense not to. I'm trying my best to catch the big moves, such as things like this. Big move up, deep pullback, buying in here, and holding until the end of the day. That's what I really want to try and get now, and that that's just personality. Uh, there's a lot of times though, if I'm kind of like today, I had a decent profit, so I just got out, and you know I ended up was watching around here waiting to buy, and I turned off trade station at this moment over here, unfortunately, and then a few bars later we got a deep, strong breakout. But what I typically try and do is it depends on the bars. You know, if let me try and find an example. Like for instance over here, if I buy bar two or bar three, it's always in long. We get this bar, then this bar. We're getting a lot of tails. I'm going to be nervous. And when I say nervous, I'm going to be interested in getting out. So when we get a breakout above this high and bad follow through, I'm very interested in taking my profits somewhere up here or getting out below this bar, and looking to buy pullback. And we really never got a good place to buy. Maybe you buy here, but then you got to get out here. And then when you see things like this, strong bear breakout, I'm less interested in just getting out, and I'm more interested in trying to catch a big move. Maybe selling stop up here and just holding and getting out somewhere down here. So it depends on what the market's doing. And I know that's kind of I hate to give you that answer, but it really does. So let's kind of break apart your question here. So how do you adjust stop loss as the trade's progressing? Okay, so what I would do, let's just go back to today for use. We'll use today as an example. If the market's really strong and really trending, I'm much more willing to use a wide stop and much more willing to hold. So, for example, if I bought in here, I'm probably going to get out below this bar, and not hold. Reason why is we never really got consecutive strong bull bars. We got it's rather disappointing. Look at today, big doji. So traders will probably make some money selling above. So it's weak follow through. So I'm much more interested in getting out than just holding with the stop down here, because I think it's more of a trading range. When we get something like this, it's a lot of consecutive bull bars. Each close is above the prior close. So it's a micro channel. I'm much more interested in holding, betting that the first reversal down will fail and we get another leg up. So really it depends on what I would do with always in. If I bought up here or anywhere in here, I'm not, where's my stop over here? Well, realistically, I'm probably just going to keep it down here. I know it seems far, maybe move it down here, but I don't really pay attention much to it. I'm focused on, at this point, getting out. And then we get this strong bull breakout bar next, close to 16 moving average within these highs, and then we get bad follow through. I'm probably just going to get out. And my reason for that is it's reasonable to sell, maybe above this bar, below this bar right here. So, and sell more higher and get out of break even. So if I was to buy here, I'm going to keep my stop down here. Then we're going to rally up, and at this point my stop's still down here. If I get out, I'm going to wait and buy again above this high too. If I get out here, same thing, I'm going to buy again above this high too. If I'm long in here, I'm going to keep my stop down here, and then we break up to the upside, I'm going to move my stop down here. However, when I see this, I may get out. I probably would. And maybe I buy again here. But if I did, I'd probably get out here. So it really varies, Personally, I think we'd go sideways for a little bit, so I'd be less interested in just holding. I'd be much more interested in taking a break or buying lower. When the day looks like this, such as if I sell this close or this close, and I think, okay, gap down, we may have a deep pullback to the moving average, it's above bar 1, I'm going to probably get out above this bar. I may go long, but if I go long, my stop's down here, and then we see this, I know I'm thinking trading range, possibly bear trend day, spike and channel, possibly trending trading range day, which is what we got, and it's a spike and channel. I'm much more interested in looking to get out, so maybe get out. I probably would get out below here. If not, I'd get out below here. So what I typically do, most of my trades are, I just exit the market, such as during this bar, and that's usually if I'm, if I know I'm not going to be able to watch for a while, or if I'm tired, or if I just don't want to sit, just don't want to hold. Sometimes, I try and do what I'm feeling at that moment, and I just try and do the right thing. So, over here, normally I'm just going to keep moving my stop. So my stop's down here, I'm long, I see this bar, I'm going to move my protective stop to 1 tick below this bar and just get stopped out for a small profit. If I sell below this bar, I'm going to put my stop, probably just going to put it above this bar. I can see the logic when I'm putting it up here, but it's only a few ticks higher. So I'll just put it up here. We start to sell off, we got a new low on the day and bad follow through. I'll probably just take my stop and move it to 1 tick above this bar and get stopped out. And then, if I buy above this bar, and this is where it's kind of interesting. If I buy above this bar, I may use a stop maybe down here. I don't get stopped out at a new low and a turn up. But still always in short. So if I bought up here, I may consider getting out, moving my stop to below this bar. Same thing. So really if you think about it, I'm stopping myself out on most of my trades. So let's see, do I trail? Yes, basically I trail. If here's a great example, we get something like this. I'm going to sell maybe here, somewhere in here, maybe below this bar, put my stop up here. New low, stop up here. Wedge bottom, 1, 2, 3, second entry buy. I'd probably just move my stop 1 tick above this bar, get stopped out, get short again, sell off, stop up here, maybe get out here. But if I did, I just, again, I'd be short. I'd just get out above this bar, and then I'd sell again, and then we get three bars down, stop up here, strong breakout, move my stop to here. Not going to get out above this bar. Another breakout, move my stop. Maybe, I don't know, somewhere up here, but 3 pushes down, spike and channel, spike, 1. First push, second push, third. So it's 3 pushes, spike and channel. I may just move my stop up here and get out. And then what? Well, I'm thinking 2 legs sideways step at minimum. First leg up, probably won't sell. I'm thinking we'll get some sort of bottom, maybe a test up. And we never really got a good signal bar to buy. And then at some point, I sell again. Maybe I sell here, stop up here, and then what do? I'd probably get out somewhere over here. So yeah, I am trailing. I'm trying to swing, catch big moves. I'm far less interested in scalping, far more interested in catching big moves. Over here, same thing. First bar of the day, buy above it, stop below bar 1. Will I get out below here? Probably not. So then we get a new high. At some point in here, I'm going to move my stop down here. We sell off, new high, but not going to move my stop. Maybe I get out, but if I do, I buy again up here or above this bar. And then, I probably wouldn't get out below here because the pullbacks are small. And then once we get up to here, we get this strong breakout and reversal down. I'm getting out. I'm moving my stop. If it's here or here, I'm certainly moving it below this bar and getting out. Then we sell off, 3 bars down, but fairly weak bars, so I'm going to, if I shorted below this bar, stop up here, I'm going to stop myself out above this bar, or certainly during this bar. And I'm going to get long. I'll buy, stop down here, and I'll hold. Do I get out below this bar? Well, probably not, because it's never triggered, but I'd be interested in getting out below here. And that's pretty much the day. So that's really, as far as trade management goes, that's how I would do it. I don't pay as much attention to actual risk, and the reason for that, this person's asking, do I move my targets to break even? Not really. I think it's okay to do. I know there's plenty of people, they sell here, stop up here. Maybe once it reaches 1 times their target, they sell out at 50%, move the stop to break even, and just trail. But for me, I'm trying to, with always in, I don't, risk is risk, and for me, there's usually a better stop than break even. If I'm trying to think of an example. If I buy above this bar and immediately goes up in my stop to break even, sure, I'll do great on a day like today, but it really doesn't make all that much sense. For instance, here, maybe I went short below this bar or sold below here, or maybe let's say I short below this bar, stop up here. Well, if we sell off, we're getting consecutive bottoms. If I move my stop to break even, I'm going to stop myself out right at the top of this pullback, right around 50%. And that's right where bears are selling. So there's usually a better stop than break even. So I don't really do break even that much. When it comes to actual, when actual risk comes into play, do you adjust differently based on how the bars look, and if so, what bars? Yeah, that really, for me, it always depends on what the bars look like. For instance, here, if I sold below this bar, my actual risk was like a few ticks, 1 or 2 ticks maybe. I'm not going to get out at 1 point because that's 2 times my actual risk. No, I'm going to hold, and I'm going to say, okay, a lot of bars down, first reversal up should fail, and I'm going to try and hold through this pullback and get out somewhere down here possibly. Or I might just keep my stop up here and say, okay, first reversal up again should fail, 50% pullback, maybe we're forming a channel, I'm going to get out on the next new low with the stop, my stop's up here, sell off again, move my stop to here, and now we're at the bottom, but I'm thinking, okay, wedge channel, tight channel, first reversal up probably will fail, but I'm going to get out here and I'll look to sell again, and if I got out here, that'd be the right call. clearly always in long. So I'll buy, stop down here. And then, what do you do here? Well, that's a tough call. Again, probably the first reversal up will fail. First reversal down in this case with this many glare bars. So I definitely get out on the second entry short. And here I'm getting out. If I didn't get out below here, I'm definitely getting out below here. I may go short. And if I went short, stop above here. Actual risk is a lot. It's more than that. And on a side note, when you get big bars like this that are confusing, a lot of times they pull back to 50%. But yeah, I'm going to swing trade. If I'm selling this, my default target, if I want to set a target, is a new low. It's moving average gap bar, 50-50 chance we get a new low and a lower low major trend reversal. So I'm just going to sell and do that. Here, decent breakout, bad follow through, more bad follow through, more bad follow through. But really not a decent, really second leg down, likely not a good buy. And here, again, not really a great buy. Maybe you get out above here, maybe not. I'm definitely getting out above this bar. 3 pushes down. It's not giving me what I wanted. It looks like a pullback, and we may test up to here. I'm going to get out. And, tight enough channel. First up should fail. So at this point, if I went short again below here, I'm interested in getting out. I'm going to get out above this bar. I may go long, stop down here. But it never triggered, and, now it triggered. But not as great of a signal bar. So if it went long, stop down here. Then we're getting bad follow through, bad follow through, bad follow. We're getting weak follow through, and that's just one of those things where if this looks weak, bad signal bar, bad breakout, tail, bad follow through, it's not strong. There was never a clear place to buy. Looks like more traders are interested in getting out. Up here they bought, up here scaled in. So I'm gonna be interested in getting out, and then definitely on this bar, what do you do? I'd probably just get out. I think it's pretty late in the day, and that's what you get. So hope that's answering a question. For me, it always depends on what the market's doing. Okay, and here, again, here's another question about break-even stops. This person said, when do you feel like it's time to move to stop to break even? One problem I'm having is getting break-even stops hit, then trade moving in the original direction. Yes. That is exactly why I pay less attention to break-even stops. Think about it. Think about what you're doing when you're taking a break-even stop. Well, or when you're using a break-even stop. You're in essence, preventing yourself from taking a big loss. So, let's let me find a decent example here. Kind of what I'm talking about with break-even stops and why I really don't like them in general. Well, this kind of works. Let's say this is just a quick one. You move down, probably second leg trap. 3 pushes down, 1, 2, and 3. Maybe a wedge bottom, 1, 2, 3, and then we got a bear breakout. So consecutive sell climaxes, consecutive bottoms. Bad follow through, possible final flag, and it's reasonable to buy, expecting us to get back up to here. Yes. So let's say I buy here, put my stop down here, and I say, ooh, the market's going my way. I'm going to stop and break even. Well, I'm in essence very much limiting my risk. When other traders are going to buy above this bar, and if anything, they'll probably buy below this bar and use a stop somewhere down here. So think about it. If you buy up here and use a break-even stop, you're in essence risking a lot less than others. When you give up risk, you are lowering your probability. It's the same thing here. If I buy above this bar, my stop's down here. If it goes my way, guess what? I'm thinking, possible exhaustion, first target this low, and maybe this low as well. So I'm not going to put a break-even stop here. If anything, I'm going to buy more here. And you go up, and then we pull back, and that's the exact reason why. Traders are gunning for break-even stops, and one of the reasons why is traders are selling this high. They'll sell as high, and they'll scale, and they'll get out. So you have to be careful with break-even stops. I don't like them personally, because there's always a better, in my opinion, I'd rather use a price action stop. For example, if I sell below this bar, or let's say I sell below this bar, here, clearly I could move my stop to break even, sure. I'm just going to keep it maybe above here, a couple bars down. Maybe I'm just going to get out above here, maybe. If I do, I'm going to get short again below here, maybe here. Stop up here. I'm not going to let that stop be hit. Another sellout, move my stop to here. Am I going to get out break even? No. I'm going to get out well before break even, but I'm still going to keep my stop up here arbitrarily. Then we get this, wedge bottom, consecutive sell climaxes. I'm going to get out above here because it doesn't make sense for me to hold anymore, and I'm expecting 2 legs up. I really do not like break-even stops. Just because it's, there's always a more logical stop placement in my approach, from what I believe. Kind of like here, trying to think. Yeah, so even the same thing here. I sell below this bar, breakout pullback short, sell below, stop. If I sell below this bar, stop up here. Well, goes my way. 3 pushes down, 1, 2, 3, possible double bottom. We may get a deep pullback, and if I sold here, the last thing I'm going to do is get out at my original entry here at the moving average, where traders are going to sell more. My stop's up here. And if I did that, that's the issue. You sell below here, price goes down, you get out of break even, then price goes down, and you go, darn, I missed out on a good move. So I wouldn't do that. Trying to find a more obvious example. Now here it's kind of the same thing. Route, 2 legs down, possible, final flag, always in long over here, strong buy climax, possibly exhaustion. So the last thing I'm going to do is get out at this low. If I don't get out over here or below this bar, I'm not going to get out at this low. If anything, I'm going to buy here. Or you're so low in that range. So I hope I'm making sense with break-even stops. If you're gonna, break-even stops, they're okay. You can use them, but the reality is you have to remember, kind of like over here. If I buy here, am I going to move my stops break even when we're over here? Sure, maybe. The reality is, though, I'm going to plan on getting out before then, and I'm never going to let a break-even stop get hit. This is strong enough for a second leg. Maybe a measured move up. It's a spike. We may get some sort of channel, and then we just ended up going sideways the rest of the day. So yeah, but if you're going to use break-even stops, you're going to get your targets. You're going to get hit and stopped out of break-even more often than if you use the right, better stop. And so that's my problem with break-even stops. Most of the time, the times they don't stop you out, it made sense to hold, and the times they do stop you out, at that point it's kind of already too late. If you sell below here and move your stop to break even and get stopped out up here, well, you're already selling pretty high in the range.